Okay, so fundamental analysis, right? This is understanding the financial health of an organization, as in its simple term it is, right? For the financial professionals in the group now, they probably understand this much better than most of us, right? But for the people who don't, right? What are the key parameters that go into analysis of analyzing fundamentally how the organization is, right? This is a deep topic, mind you. I will try to do it in a more simplistic fashion so that you understand from a peripheral perspective, and you can go deeper during the respective times. One of the first one that you need to do in fundamental analysis out of 7 is do the balance sheet. Understand the balance sheet to the T. Balance sheet is nothing but the criteria of their assets and its liability, right? What is getting the money in and what is getting the money out. That's what it does, right? So simply put, if they are balanced and they are managed, that company is doing very good with the capital employed. That's what it means. Now there are key ratios that we'll talk about subsequently, which will make you and enable you to understand whether the health of the balance sheet is all right or not of an organization, right? Secondly, one of the most important things that one should know is the promoters of that company have the right stock holdings. So my criteria is they should be upwards of 60% of their holdings in a particular company, and in fact the 75% ones are the one I typically filter out, rightly. If the other parameters are okay, then I let go of this parameter to the point of between 55 and 60%. Okay, so promoter holding should be upwards of 60%. Is that what my minimal criteria is? Third, the assets and liabilities, right? How are the assets giving the outcome in terms of growth that we are looking at? And there are again certain key ratios I mentioned in the balance sheet related one. Same for liabilities, how debt driven the company is and how it is working out that debt so that it doesn't fall into the bankruptcy mode, right? This is the two criteria. Again, key ratios help you do that, and we'll cover that in the ratio section that we go into. The cash flow, right? Or rather revenue. Okay, so revenue is what the company gets as money into the system, into the organization. So wherever it comes from, it's revenue, right? That's a top line of an organization. Is it going healthily up is what you should be looking at for this criteria. As simple as that, right? So if the revenue is good, right, bottom line we'll come to, but if the top line is good, then we see the cash flow. What is cash flow? Cash flow is the company having sufficient money to run its day-to-day operation, right, from its operations that is doing. If it is going up in the right fashion and it is better than to meet the bottom line activities, we are good. So if it is not creating the cash flow, it's borrowing more than it's required, then there's a problem, right? That's what a cash flow helps you understand. So cash flow is one of the key indicators to do that. Then there is EBITDA. This stands for earnings before income, depreciation and taxation and amortization. Okay, so this forms typically your bottom line. So these are all the expenses after if the revenue has come in, then you do all the operational expenses. That leaves you with the EBITDA. That's what it means, right? Then from the EBITDA you remove your income taxes, your depreciations and amortization costs and so on and so forth to give you the true bottom line or the bottommost line. So the bottom line typically is your EBITDA. Okay, that is revenue minus the operation costs, and that gives you the bottom line. So you should see how that is getting maintained, because below that then there are ways of managing things accordingly based on the various criteria again. Okay, then the final one should be the growth. Is the company growing over the last 5 years, over the 3 years? I look at 5 years, whether the compounded rate of growth is very high, and if the sector is growing so high at that rate, is this growth in tandem or more? That's what the criteria and the fundamental kind of analysis is. Now you don't go deeper into this to create paralysis of the analysis, but these should be the larger criteria. And now we'll understand how these are looked at from a sectoral analysis perspective. Okay, I'll see you in sector analysis.